Hey, welcome to episode 3 of Taxes with Certified Taxes. My name is Kevin. I'm the owner of Certified Taxes. I do virtual tax and accounting firm. You can reach me on my social media accounts, Certified Taxes, or visit my website, certifiedtaxesllc.com. I'm here to teach taxes, to help you understand taxes, make tax filing easy, and help business owners understand the tax law, to reduce taxes and just understand taxes overall, to make it easier and more understandable for everybody. This episode, we're going to go over how to reduce taxes if you're self-employed. Previous episode, we talked about how to reduce taxes if you're a W-2 employee. So this episode, if you're interested, recommend go back, check that one out to see how to reduce your taxes. What can you do to help lower your income, taxable income, and reduce taxes? So, what qualifies someone as being self-employed? Pretty much, if you receive a 1099 NEC, 1099K. You kind of side hustle, you're Uber driver, you're a content creator, you receive commissions if you're real estate, that qualifies you as being self-employed. So if you don't receive a normal payroll check like every other week for the same amount, technically, you're employed. But if any other income you receive, you'll be self-employed. There's a lot of benefits that go into being self-employed. Obviously, a lot more work, but there's a lot more benefits as being self-employed, whereas a W-2 employee, you're limited on what you can do to reduce your taxes. So being self-employed, there's lots of incentives. IRS gives you a lot, government gives you a lot of incentives to being self-employed. You could like I said, different ways to reduce taxes to kind of manipulate, reduce your taxable income to lower your taxes. So let's get into a few strategies, ones that are kind of commonly missed or people that are aware of, or maybe they are aware of, they just don't know how to implement them. So let's get into it. So the first couple things that I do recommend to a lot of my clients is, it's probably the most obvious one, but a lot of people don't do it, is keep track of your income and expenses. It sounds pretty obvious, but people don't do it. They wait till the end of the year to do that. And by the time that happens, they miss some expenses, they miss deductions because they're going through bank statements. They don't see anything, or it's just overwhelming. They don't have time to do it, so they didn't just missing deductions, which, they end up paying more taxes than they should. So highly recommend that keeping track of income and expenses on a monthly basis, quarterly basis. That's a service I do offer. So if you're interested, please let me know. Send me a message, schedule a consultation, and I'll be happy to help you out on a monthly basis and let you know the benefits of doing that. So another few benefits of why you want to keep track of your income and expenses is because you want to see business-wise, financially, where is your business at? Do I need to increase expenses? Do I need to decrease expenses? For example, let's say, made a little bit more this month. Let's go put more money into marketing. Let's update our software. Eventually, that's going to help you grow your business. So the more you put into it, the more you get out. So that's another reason why you want to keep track of that. Also, too, once you get in kind of funding, like a loan, banks going to want to see your financial statements. They want to see your tax returns, your taxes. If you don't have that, it's going to be hard to receive any kind of extra funding to, help your business, to get some capital to help you grow. So let's get into ways to reduce your taxes. Like I said, these are ones that are, I would say, missed the most. They're common ones, but people aren't aware of them, or they are aware of them. They just don't know how to use them into their favor. So the first one would be vehicle expenses. So if you have a business, if you have a business vehicle that you use for your business, obviously that's 100% taxable. But if you use your personal vehicle, you could also use that deduction, but it's a portion of whatever the business use of the vehicle use. So it's a mileage. You want to always keep track of your mileage, even if whatever strategy you're going to use. If you just want to expense the mileage, you can do that. Or if you want to do the actual vehicle expenses, like the maintenance, the gas, and the car wash, you could do that. But it's a portion of the business actual use of it. So the way you would figure that out is divide business mileage with the actual all mileage that you drove for your vehicle, and that's the percentage you could write off. So either way you go, you want to always keep track of your mileage because you never know which way it's going to benefit you the most down the road. So like I said, keep track of your mileage. The second one people are aware of, maybe not sure actually how it works, would be depreciation. So if you use your vehicle, if you have a business vehicle or a personal vehicle, you can use depreciation. So that's an expense coming out of, or deduction coming out for your business, but it's not like any cash that you're actually spending. So, for example, let's say you purchase a vehicle for $10,000. So for the next 5 years, you're able to deduct 2,000 worth of deductions. So it's just an extra expense that you could deduct. It's not coming out of your pocket, just extra deduction you could use. Same thing for real estate. If you have properties, real estate properties, rental properties, depreciation is the biggest tax deduction that real estate investors use because it's a huge deduction. They're not actually coming out of their pocket. They get to deduct, a portion of the cost of the property over time. So a lot of people use this to their advantage. Let's say you're real estate. This is the biggest deduction people use, and this is why people get into real estate because they have that big tax savings. Reduces their taxes. So again, it's just something that people aren't aware of, but it's easily done. It just has to be tracked each year. An extra step, but it's very, very beneficial for you. The next one would be the home office expenses. Again, people probably at this point people have heard of it, but I get a lot of questions. How does this actually work? What do I have to do to actually use it to my advantage? So, if you have a space in your home, like an office or room, you're able to deduct any kind of home expenses for, like example, the gas, utilities, internet, cable, all that could be a portion of that could be deducted. Or if you want to do the easy way, which standard way, you just multiply $5 by square footage of the room. You could expense that on your taxes. So that's done when you're filing your taxes. That's when you would enter that and get that figured out. So let's say you're a content creator and you have an extra room that you create the content that qualifies you be able to qualify you to use home office deduction. So the office or the room has to be primarily used for your business. It can't be like a kitchen table or the living room. It has to be exclusively for your business, for business use. Sticking to the home office deduction or kind of home expenses. Next one would be, it's called the Augusta rule. It's named after the Masters tournament, golf tournament in Augusta, Georgia. So what this one is, you could rent your home out for less than 15 days, and the income you receive from those less than 15 days, you're able to, all the income you receive, it's tax free. So the reason why people do this, or the way you could do this, is you could rent your home out to your business, host an event, host a board meeting, have your employees come over. The rent goes from your business to your personal income, and that income you receive, it's tax free because it'll be less than 15 days. So that's the way people like to strategize towards the end of the year. They realize that the revenue is kind of increased and net profit is kind of high, so they try to figure out what's an extra expense we could do before the end of the year. That's one great way a lot of people use to their advantage, but obviously make sure everything's documented, it's legit, and it's going to help you get an extra expense at the end of the year. Next one would be hire your children to your business. So there's a few ways you got to do this. The reason why people do this because it's expense towards your business and it's tax free to the kid. So you could pay them up to $13,850. The reason why that number is because that's the standard deduction. So let's say they end up having to pay, or the child ends up having to file taxes. Their net taxable income would be zero anyways because they get the standard deduction, which will decrease their taxable income to zero, and then they're not paying taxes. But to keep in mind, you have to pay them out of your LLC, because if you end up paying them out of your S corp or corporation, then that's when they have to pay payroll taxes. So I guess you could say the workaround would be to create a family management company, and what the sole purpose is that is they're going to manage the child, their scheduling, their responsibilities. So the business will pay the management company, and the management company is going to pay the child, and that's how you work the workaround and pay them through an LLC to avoid payroll taxes for the child. So it's something you really have to be documented. Obviously, the work has to be legit. The hours have to be written down, and so that's one that I recommend to work with someone. If you're gonna if you want to do that, definitely work with someone that knows how to do that, implement that, and make sure it's done correctly. Another one would be, would be kind of missed, would be your cell phone. A lot of people use their cell phone for work. If you're self-employed, they want to know, how does that work? So most of the time, you could deduct 50% of your telephone expenses. Reason why I say 50% because a lot of time it's 50% personal, 50% business. So it's kind of a good number to use. But let's say you have an actual business phone. Obviously, that's going to be 100%. Next one I kind of touched on a little bit before is if you're a content creator. So you create content, any kind of platform, whatever the equipment you use, it's going to be a business expense. So it'd be camera, microphone, lights, headphones, any laptop, software you use, all that's going to be tax deductible. Again, when you're a content creator, you're still considered self-employed. So make sure you still want to keep track of our income you receive, keep track of all the expenses you use. So all that's going to be tax deductible. If you travel to like a studio, make sure you keep track of the mileage. Anything that's going to use to create the content, it's going to be a tax write-off, a business deduction. So again, it's very important to keep track of that throughout the year, so you know what to expense towards your business. The next one would be it's kind of, I mentioned it before in my other videos. This would be to elect an S corp status. So what that is, once you're an LLC, you operate an LLC. Then once you get certain income level around the 40, 50K range, that's when you want to elect the S corp. It's because S corp eliminates the self-employment tax, but it does put you on payroll. You do have to be on your own payroll, pay payroll taxes, but that expense payroll tax is a lot less than paying self-employment taxes. So the benefit it's outweighs a lot more because you end up paying a lot more self-employment taxes compared to payroll taxes. So again, that's something too you want to speak to someone that's knowledgeable about that when it's the right time. Because a lot of times people come to me and say, "Oh, someone told me to be an S corp, so I'm an S corp now." When really they shouldn't be an S corp yet. They should wait until they hit that income level because the benefits of that really outweighs the tax savings. So if you're thinking about doing that or interested, maybe in the future, definitely talk to someone. Want to schedule a consultation with me? I'll be happy to talk to you about that. How it works, how it gets set up, when you should do it. If you're ready now, the benefits of that. So be happy to help. If you have questions, feel free to send me a message on my Instagram, Certified Taxes. Visit my website, certifiedtaxesllc.com. Schedule a consultation again, or send me a message if you're interested in any kind of these expenses. You want to know how they work, or you're interested in become accounting services. Please let me know if you have questions. I'll be happy to help. Next video, we're going to go over most common questions that are asked, updates, tax law updates, anything related to taxes, kind of overall picture of taxes. So be lookout for that episode coming up next.